Hello viewers, welcome to my channel. I am Hashim Ali Khan. So now I am doing the next problem on capital gain. Already 8 problems I have completed on computation of long-term capital gain. I have already uploaded the introduction part of computation of capital gain and already 8 problems I have completed. So if you have watched all the 8 problems introduction part, definitely you will get a lot of knowledge command on the topic of capital gain. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject Income Tax 1 for the assessment year 2021. Watch the earlier videos, get a full command on the subject, then you can continue this. If you join in between, you may not be able to understand. So before starting the next problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. So take a printout, keep it ready before start watching the videos. Now, 9th problem. See the 9th problem. Mr. Ram sold a residential house in Mumbai for rupees 36 lakh. So this is the consideration received. The cost of acquisition 16 years ago was 8 lakh rupees. Cost inflation index 100. So it's a long-term capital gain because after keeping the house for 16 years, now he is selling. After 3 months, he purchased a flat for rupees 38 lakh 50,000. Selling expenses 1.5%. Calculate income from capital gain. So in this problem, straightforward problem. After selling the house in Mumbai, within 2 months, in 3 months, after 3 months period, he has purchased a new house, new flat for rupees 38 lakh 50,000. Income Tax Act says, if an assessee sells a house, residential house, and purchase residential house within a stipulated period, the stipulated period is 1 month before the date of transfer or 1 year. 1 year before the date of transfer or 2 years after the date of transfer. Within this period, if an assessee has purchased a new house or if he is constructing a house within 3 years from the date of transfer, he will get exemption under section 54. So exemption under section 54 will be allowed if an assessee sold one residential house and purchased another residential house within the stipulated period. The stipulated period is 2 years purchase of the house within 2 years from the date of transfer or construct the house within 3 years after the date of transfer, or 1 year before the date of transfer. Within this stipulated period, he must purchase a new house. Then exemption will be given. Now, see the solution carefully here. Computation of LTCG, long-term capital gain of Mr. Ram for the assessment year. Consideration received 36 lakh. Sale proceed. Less transfer expenses. It is given in the problem selling expense are 1.5% of sales. So 1.5% of 36 lakh, 54,000. Subtract net consideration 35 lakh 46,000. Less indexed cost of acquisition. He has purchased the house for rupees 8 lakh 16 years back. At that time the index number was 100 given in the problem, whereas current previous year index is 289. The index number for the current previous year 2019-20. Our assessment year is 2021. Previous year is 2019-20. So the index number for the year 2019-20 is 289. So 289 by 100, you will get 23 lakh 12,000. Subtract, we will get capital gain 12 lakh 34,000. From capital gain, exemption is allowed under section 54. So how much exemption? In working note. The assessee sold a residential house and within stipulated period purchased another residential house, so exemption under section 54 is allowed to the least of the following 2 amounts. Here you have to remember, least of the following 2 amounts will be allowed as exemption. The first one is cost of the new house. Given in the problem, the cost of the new house is 38 lakh 50,000. Or second one, capital gain amount. The capital gain amount is 12 lakh 34,000. Whichever is least in these two is allowed as exemption. The least is 12 lakh 34,000. So exemption under section 54, 12 lakh 34,000. So 12 lakh 34,000 minus 12 lakh 34,000, LTCG is nil. That's it. This is the problem number 9. Now I am reading out problem number 10. Mr. X sold 10 acres of agricultural land at rupees 5 lakh per acre. So sale consideration for 10 acres are sold, each acre 5 lakh rupees. So 5 lakh into 10, 50 lakh, which he acquired 14 years ago at rupees 26,000 per acre, cost inflation index 109. So in this problem, the assessee sold agricultural land, and he has purchased this agricultural land 14 years ago at rupees 26,000 per acre. At that time, the cost inflation index was 109, and after 6 months, he purchased another agricultural land for rupees 40 lakh. Compute income from capital gain. Previous problem, assessee sold one agricultural land and one residential house, and within stipulated period another residential house is purchased. So exemption under section 54 was allowed. Now in this case, the assessee sold one agricultural land and within 6 months purchased another agricultural land. So he will be allowed exemption under section 54B. So if agricultural land is sold and within stipulated period another agricultural land is purchased, then exemption under section 54B is allowed. Now see here, computation of LTCG of Mr. X for the assessment year. Consideration received 50 lakh. How 50 lakh? 5 lakh rupees per acre. 10 acres are sold. 10 into 5 lakh, 50 lakh. No transfer expenses are given. So net consideration 50 lakh. Indexed cost of acquisition. Per acre 26,000 rupees. This is the purchase price. Into 289 divided by 109. You will get 6,89,358. Subtract capital gain. 43,10,642 is the capital gain. From this exemption under section 54B, in working note I have given the explanation. The assessee sold agricultural land and purchased new agricultural land within the stipulated period. Stipulated period means 2 years. 2 years from the date of transfer of agricultural land. Within 2 years he should purchase another agricultural land, and he has purchased within 6 months. So exemption under section 54B is allowed to the least of the following two amounts. The cost of the new agricultural land, that is rupees 40 lakh. 40 lakh is the cost of the new agricultural land given in the problem. And capital gain amount is 43,10,642. Whichever is least is allowed as exemption. So 40 lakh rupees is the least. So exemption under section 54B is rupees 40 lakh. For 40 lakh exemption I have taken. Now subtract 3,10,642. This is the long-term capital gain, which is taxable at a flat rate of 20%. That's it. So this is the end of problem number 10. Come on, now we'll start the next problem. Problem number 11. Mr. Robert sold his gold ornaments for rupees 8 lakh during the previous year. So gold is a capital asset. So he sold capital asset during the previous year. So gain arising is a capital gain. The cost of which was rupees 1,20,000 16 years ago. After selling the ornaments, within 2 months, he invested in bonds of rupees 7 lakh of Unit Tessil Chemicals and Hydropower Limited, Mumbai, which are notified as specified securities under section 54 EC. Compute the income from capital gain if the selling expense are 1.5% and the cost inflation index in the year of purchase was 100. Now the new point in this problem is the assessee has sold gold ornaments during the current previous year, 8 lakh rupees. 1.5% transfer expenses will get net consideration. Indexed cost of acquisition. The cost of acquisition was 1,20,000 16 years ago. So we have to make the indexation. 1,20,000 into 289 divided by 100, because it is given in the last line. The index number in the year of purchase was 100. So 1,20,000 into 289 by 100 will get indexed cost of acquisition. Deduct will get the capital gain. Now the new point is within 2 months after selling the old gold ornaments, within 2 months he has invested in specified securities under section 54 EC. One exemption is given by Income Tax Act, section 54 EC. In that section, the Income Tax Act says if an assessee has sold land or building or both and invested the amount in specified security under section 54 EC. What are specified securities? A list is given by Income Tax Act. In that list, one of the item is Tata Unit Tehsil Chemicals and Hydropower Limited. Unit Tehsil Chemicals and Hydropower Limited, Mumbai. This is one of the security which is specified under section 54 EC. Now, see the solution. Computation of LTCG of Mr. Robert for the year. Consideration received 8 lakhs, sale price. Less transfer expenses 1.5%. Calculate 1.5% of 8 lakh, 12,000. Subtract net consideration. Indexed cost of acquisition 1 lakh 20,000 into 289 by 100. 3 lakh 46,800. Deduct capital gain 4 lakh 41,200. Now exemption under section 54 EC. Now see the working note. Just now I told you Income Tax Act says section 54 EC exemption will be allowed only if the assessee sold a house, land or house or both. A land or house or both. If the assessee sold and from the proceeds has invested in specified security, then only exemption will be allowed. In the present case, the assessee has not sold the land, building or both. The assessee has sold the gold. So this exemption is not available. Exemption under section 54 EC will be allowed only if land or building or both are sold and invested in security, which are notified as specified security under section 54 EC. In the present case, the assessee sold gold ornaments and invested in specified security. Hence, exemption under section 54 EC is not allowed. He is not eligible for exemption under section 54 EC because he has not sold the land, building or both. He has sold the gold ornaments and invested in specified security. No exemption will be allowed. The long-term capital gain 4,41,200. Now, see the 12th problem. During the previous year, relevant to the current assessment year, Mr. Quick purchased a house for rupees 4,20,000 and after 12 months he sold the same for rupees 4,80,000. So Mr. Quick purchased a house and quickly sold it. That means he has purchased the house for 4,20,000 and within 12 months, after 12 months, he sold it for 4,80,000. Brokerage paid to purchase the house 10,000 and to sell the house 18,000. Calculate capital gain. See, if an assessee sells the house property, within 2 years, within 2 years from the date of purchase, it's called short-term capital gain. The holding period is 2 years for house properties. For house property 2 years. अगर 2 साल के अंदर ही अगर बेच देगा तो उसको शॉर्ट टर्म कैपिटल गेन. If he held for more than 2 years, it will be a long term capital gain. This is the first problem where the assessee sold the house within 12 months period. So it's a short term capital gain. So consideration received 4,80,000, sale proceeds minus selling expenses, transfer expenses 18,000. Brokerage paid to sell the house. Brokerage paid to sell the house should be deducted. So 4,62,000 net consideration. Cost of acquisition. Remember, indexed cost of acquisition is not available for short-term capital gain. Indexation benefit is available only for long-term capital gain, LTCG. For STCG, no indexation. So indexed cost of acquisition should not be calculated. Actual cost of acquisition. So cost of acquisition 4,20,000. He has purchased the house for 4,20,000 and he has paid the brokerage on purchasing the house. Brokerage paid on purchasing the house. This should be added to the cost of acquisition. तो 420 में house खरीदे 10,000 rupees brokerage pay करे तो total house 4,30,000. 462 minus 430, 32,000 is called short term capital gain, STCG. Now here the assessee Mr. Quick purchased the house and after 12 months he sold it. So the gain arising is short-term capital gain. After 12 months he sold. I told you the holding period 2 years. Before 2 years if he sell, it is a short term. After 2 years it will become a long term. Now, so the gain arising is a short term capital gain. Indexation benefit is not available for short term capital asset. And the STCG is taxable along with other incomes at slab system. This is for your explanation. I am giving all these notes. Short term capital gain is taxed at slab system along with other incomes. Income from salary, income from house property, or income from other sources. It will be added. There is no separate tax for short-term capital gain, it will be included. Whereas long-term capital gain is taxed at a flat rate of 20% separately. That's it. So this is the end of problem number 12. Come on, now we'll start the next problem. Problem number 13. See carefully. Sri Deepak purchased a machinery for business purpose whose written down value at the beginning of the previous year is 17,25,000. During the previous year, it is sold for rupees 21,40,000 and selling expense are 11,200. Calculate capital gain and tax liability if there is no other income. This SSC has sold a machinery. Remember, a machinery is a depreciable asset according to Income Tax Act. If the depreciable asset is used in the business, then the profit arising on its sale will be treated as short-term capital gain, irrespective of the period of holding. We should not see how many years the SSC has held that asset. Irrespective of the period of holding, it is always a short-term capital gain, provided it should be a depreciable asset which is used in the business. These two conditions. The asset must be used in the business, and secondly, it should be a depreciable asset. Then the gain arising is a short-term capital gain, irrespective of the period of holding. So now here, the sale proceed. Computation of LTCG, not LTCG but STCG, short-term capital gain. Short-term capital gain of Sri Deepak for the assessment year 2021. Consideration received 21,40,000. The sale proceeds are 21,40,000. Traveling transfer expenses 11,200. Deducted 21,28,800. Net consideration. Written down value. The value at the beginning of the year, the book value at the beginning of the year was 17,25,000. 17,25,000. This is the written down value, depreciated value. Now deduct it, we'll get short-term capital gain 4,03,800. The assessor does not have any other income. Hence, total income is 4,03,800. It is given in the problem, the assessor does not have any other income. So this is only itself is the total income. So total income is taxable at a slab system because it's a short-term capital gain. So computation of tax liability slab up to 2,50,000. It is income 2,50,000, rate nil, tax nil, balance. The next slab is from 2,50,000 1 to 5 lakh rupees. But our income is not going up to 5 lakh. Our income is below 5 lakh. That's why I'm taking balance. So 4,03,800 minus 2,50,000. 1,53,800. The slab rate is 5%. It comes to 7,690. So tax on total income is 7,690. From this, tax rebate under section 87A will be allowed because the SSC's total income is below rupees 5 lakh. So 87A deduction is allowed, tax rebate is allowed for lower income group people, low income group people whose income is below 5 lakh rupees. So here income is below 5 lakh rupees. So tax rebate is allowed 7690, tax liability will be nil. So how we got this 7690 tax rebate in working note, I'll explain. The SSC sold machinery which is a depreciable asset used in business. So the gain arising is a short-term capital gain irrespective of the period of holding. Just now I told you. This point where you have to remember very important provision of Income Tax Act. Since the total income is below 5 lakh, so tax rebate under section 87A is allowed to the list of the following two amounts. Actual income tax 7690 or fixed amount 12,500 given by the Income Tax Act. So whichever is least is allowed as tax rebate. So 7690 is allowed as tax rebate. So tax liability will be nil. That's all. This is the end of 13th problem. Now see the 14th one. Mr. Alim is a film producer. During the previous year, he sold a film projector for rupees 3,40,000. A film projector is also a machinery, and film projector is used in the business. So just like the previous problem, a film projector is a machinery which is depreciable and used in the business. So the gain arising is a short-term capital gain. Short-term capital gain irrespective of the period of holding. And in respect of which, and which had cost him 3 lakh rupees. Actually, he sold the film projector for 3,40,000, which had cost him 3 lakh. And in respect of which 80,000 had been allowed as depreciation during the last 2 years. Last 2 years, 80,000 depreciation is provided. So this depreciation will be deducted from the cost of the asset. The cost of the asset is 3 lakh. 3 lakh रुपये में से खरीदे थे, उसमें 80,000 रुपीस depreciate हो गया, तो 3 lakh minus 80,000 is 2,20,000. 2,20,000 is called the book value or written down value and had been allowed depreciation. Expenses on sale amounted to 10,000. These are the transfer expenses, selling expenses. Calculate income from capital gain. This problem is exactly similar to the previous problem. Computation of STCG, short-term capital gain of Mr. Alim for the assessment year. Consideration received 3,40,000. Sale price of the projector is 3,40,000. Less transfer expenses 10,000. 3,30,000 net consideration. Cost of the asset is 3 lakh. Less accumulated depreciation 80,000. So deduct 2,20,000 is the written down value. WDV. Now 330 minus 210, 1,10,000 is the short-term capital gain. That's it. The SSC sold a film projector which is a machinery, which is depreciable asset used in the business. So the gain arising is a short-term capital gain. That's all. This is the end of problem number 14. So totally 14 problems I've explained you regarding the computation of long-term capital gain and the short-term capital gain. So if you are satisfied with my lecture, give a like to the video. Share it in your group, in your friend circle so that more students can watch these videos. Give your comment on these lectures and don't forget to subscribe my channel if you have not yet subscribed. We'll continue the next problem in the next video. Come on, we'll start the next problem, that is problem number 15. Mr. Krishna sold a house on 1st September 2019 for rupees 30 lakhs. So he sold, so sale proceeds are 30 lakh. This house was inherited by him during 2001-2002 from his father, who had constructed in 91-92 for rupees 1 lakh. That means Mr. Krishna is the SSC. He got the property through special mode of transfer, that is inheritance. Actually the house was purchased by his father. Now he got through inheritance, right? So the cost to the present owner will be the cost to the previous owner. Mr. Krishna has spent 1 lakh rupees on renovation of the house in 2006-2007. There is improvement. First of all, the asset was purchased before 1/4/2001. So the SSC can choose the actual cost or FMV, whichever is higher. Actual cost was 1 lakh rupees. FMV is how much given. The fair market value on the house on 1/4/2001 was 9 lakh. So FMV on 1/4/2001, 9 lakh. So we consider 9 lakh. We will not consider 1 lakh rupees. Then this house was under negotiation for sale in May 2010 and he received 40,000 as advance money. The contract could not materialize and the advance money was forfeited. So in the year 2010 May, there was a negotiation for the sale of this house, but the negotiation was not materialized. Then advance money received 40,000 was forfeited. Now Income Tax Act has given the provision, if the advance money was received before 1/4/2014, then advance money forfeited will be deducted from cost of acquisition. If the advance money received and forfeited after 1/4/2014, then the advance forfeited will be taxable under income from other sources. That is the provision. So demarcating point is 1/4/2014. If it is forfeited before, deduct from cost of acquisition. Here it is forfeited in 2010. So before 1/4/2014, so 40,000 will be deducted from the cost of acquisition. compute the amount of capital gain assuming that he does not qualify for any exemption. He is not getting any exemption under section 54. So we have to compute how much is the capital gain. So see, computation of LTCG of Mr. Krishna for the year. Consideration received 30 lakh, no transfer expenses, net consideration, indexed cost of acquisition. 8,60,000 into 289 by 100. How this 8,60,000? Here I have shown. FMV on 1/4/2001 is 9 lakh rupees given in the problem. From this, advance money forfeited in May 2010. So that will be deducted. The actual cost of acquisition 8,60,000. So this is the cost of acquisition. Now indexed cost of improvement 1 lakh rupees he has spent in the year 2006-2007. So 1 lakh into 289 by 122. 122 is the index number for the year 2006-2007. It is given in the problem. So 2,36,885. Add up 27,22,285. Subtract, you will get 2,77,715 as LTCG. That's it. Now in working note you should write out the SSC got the property through special mode of transfer, that is by inheritance. Hence the cost to the previous owner is the cost to the SSC. The asset was acquired before 1/4/2001, so the SSC can choose the FMV as the cost of acquisition. FMV as the cost of acquisition. The advance money received and forfeited before 1/4/2014, so the advance money forfeited 40,000 will be deducted from FMV as above. That's it. This is the end of 15th problem. Now 16th one. Mr. Raju owned a residential house and sold in October 2019 for 11,80,000. Sale proceed 11,80,000. Computation of LTCG of Mr. Raju. Consideration received 11,80,000. This house was purchased for rupees 1 lakh in 1982-83. Very long back. Long-term capital asset. Then he spent 10,000 rupees for construction of another room improvement in 84-85. Expenses incurred in execution of sale deed were 10,000. Selling expenses are 10,000. Compute his capital gain. So very simple, straightforward problem. Transfer expenses are 10,000, 11,70,000 is the net consideration. Now indexed cost of acquisition. He has purchased the house for rupees 1 lakh. 1 lakh in which year? In the year 1982-83. 82-83 means long back, before 1/4/2001. When an asset is purchased before 1/4/2001, the SSC can choose the actual cost or FMV, whichever is higher. Here actual cost is 1 lakh, but FMV is not given in the problem. Then when fair market value is not given, we take the actual cost. Actual cost 1 lakh into 289 by 100, 2,89,000. Indexed cost of improvement. He have added 2 more rooms by incurring 10,000 rupees. So 10,000 into 289 by 100. So if an asset is purchased before 1/4/2001, the index number will be taken as 100. Year of purchase index number is 100. 28,900. So ultimately long-term capital gain 8,52,100 LTCG. In working note you can write the asset was purchased before 1/4/2001, but the FMV on 1/4/2001 is not given, so we have taken the actual cost as the cost of acquisition. That's it. So this is the end of problem number 16. So we'll continue this in the next video, the next problem. If you are satisfied, give the like to the video, share it in your group, in your friend circle, so that more students can watch. Give your comments on these videos and subscribe my channel.